Good morning, everyone. Thank you very much for joining our Buying a Home in the Netherlands webinar today, taking time out of your most likely busy schedules and going inside instead of being outside in the sun. Before we start, I would like to tell everyone that today's session will be recorded and shared, meaning that tomorrow you will receive not only the presentation, but also the recording of the whole presentation. Well, first of all, let me introduce myself. My name is Ludo. I work at Expat Housing Network as an expat buying manager, specifically in the region of Amsterdam, so-called Greater Amsterdam, so also Zaandam, Almere, Amstelveen, Haarlem, everything that's about a 30-minute drive from here. There we go, the Amsterdam expert. Well, now you know who I am, but I also want to know who you guys are. We always like to ask a few questions before we actually start the webinar so that we can potentially tailor the webinar a little bit more towards the audience that we have. So feel free to answer a few questions that I just started within the poll. Of course, not obligated, but it's always nice to know who I'm talking to. For example, what age range you are in, if you're under 35, and we'll talk about it a little bit later on, but it has some benefits regarding transfer tax and a few other things. Maybe good to let you know as well, there is a Q&A section within this webinar. So if you do have questions during or after the webinar, feel free to put it in the Q&A. My colleague Rick, who I'll introduce a little bit later, will also be able to answer them during the webinar. Actually. Nice. So we have actually a good mix between people under 35 and just above 35. A lot of singles, but also a lot of couples looking. Nice. Well, thank you very much for answering all the questions. I will end the poll now so we can start with the rest. Well, first of all, greatness is achieved in the agency of others. That's what we definitely believe. That's why I'm not here by myself today. I'm here with my colleague Rick, who will be, like I said, doing the Q&A, answering all the questions that you have during the webinar. We have people from all over the world working at EHN. As we can see, Katie is from Cyprus, Giovanna is from Brazil. We have Ellen, who's originally from the Netherlands, but has lived in Thailand, for example. So people from all corners of the world. Well, EHN, brief introduction. First of all, we're not traditional real estate agents. I would understand why you say, why is that the case? First of all, we actually only help with buying homes and with renting homes. So we don't sell and we don't rent out properties. This means that we are really specialized in finding people a home, either on the buying side or the rental side, especially in a market where it's quite difficult to find a good purchase home or a good rental home. It is of added value that our specialty is in this branch. We don't charge a commission, we charge a fixed fee, meaning that even if you're buying a home of 5 million or of 200K, you'll always be paying the same amount. As you saw on the previous slide, a lot of us have lived in other countries or are actually from another country, so we know what it's like to settle in a different country as well. Added value of EHN, selling agents take offers of EHN a little bit more seriously, and they know that our clients are being advised professionally and therefore know that we have done our due diligence, etc., etc. 9 out of 10 times it's possible for us to book viewings when a consumer is not able to do so anymore. A lot of selling agents, they have specific blocks for people that have a buying agent, so they'll have an extra day of viewings just for people like us. Of course, even though we have a lot of people living from different countries, we still support by reviewing Dutch legal documents. I myself am from the Netherlands. I've lived a little while in the USA, but I speak Dutch and therefore I'm able to review all the Dutch legal documents. I think this is a very important one. We help define market value through market data. We'll come back to that a little bit later on. But it's very important to know what the market value is of a property before making an offer. And then, of course, we will inform you about rules and regulations and make sure that you don't make the same mistakes we did when we moved to the Netherlands or somewhere else. Like I mentioned, I'm not here by myself. We also have the lovely Robin here. Robin, would you like to introduce your team?
Well, I can always not trump the introduction.
Sorry, you're on mute. You're
I,
not on mute actually, but I can't hear you.
Let me see if I can change that. Everything should work. If it works better now. So the rest can hear me. So I think it might be.
Abhishek says that he can hear, so maybe it is me then.
So let me just proceed. Thank you everybody for replying directly that everybody can hear me. I'm glad. First off, thank you for a kind introduction. I'm Robin uit Den Haag is my last name. I won't challenge you to pronounce that as well because it's typically Dutch, hard to pronounce last name. But I'm from Mr. Mortgage. I'm one of the financial specialists in our lovely team. I'm joined by Cesar, Özkan, and lovely Egla as well. We value the personal approach in the whole house hunting challenge that you have, and that needs to take place in the end as well. So what we do is we understand your situation. We've seen pretty much all the situations that are out there. Essentially, always try to find the best option. We work with a quite large variety of banks and lenders and so on. So we know exactly what the best option is for you at any time. And that's our goal as well. We are independent from anybody and everybody. So we only have a focus on you to get the best financing available to make sure that you can essentially just focus on the house that you're buying and not necessarily focus on any anxiety you might have when it comes to your financing. That's the most important thing, to be able to kick up your feet end of the day in your new home, especially in this weather, maybe kick up your feet on your balcony or in your new garden. So that's what we do, guide you through the whole house hunting process, make sure that your financial situation is tip-top in shape, so you can focus on the important things in life. So that's basically what we do. We'll dive into this a bit later on, undoubtedly, in the rest of this presentation. So I would say, Ludo, take it away.
Fantastic. Thank you very much. In the meantime, I took my AirPods off. Now I can hear you again, most importantly. Cool. Well, let's get started. So today's indeed goal is to add value to you. I think that makes sense. We believe in sharing information freely. It can be quite a chaotic market and a difficult process. So it's important that you know what you're getting yourself into. First of all, some things that are good to know. And I think I'll report back to you again, Robin, as this is a mortgage related topic.
Yes, it is. NHG, freely translated, it's a national mortgage guarantee. What that means, it's a kind of an insurance arrangement. Essentially what it means is when you buy a property, let's say you buy it for 300,000 euros. You buy it right now, and then, God forbid, the property value decreases. So you take a mortgage for 300,000 euros. In 3 years, you've repaid it to, let's say, 280. And then disaster strikes because you lose your job. That means that you might not be able to afford the mortgage anymore, so you have to sell the house. Now, if worse comes to worse, then even the property value is lower than the outstanding mortgage. So let's say the value dropped down to 270 and the mortgage is still 280. So what happens is you don't have a house anymore, you don't have a job anymore, and you're stuck with this additional remaining debt of 10,000 euros. This is where National Mortgage Guarantee steps in and says, okay, this is what we'll pay. This is so that's the insurance arrangement part of it. Now, there's a limit to you can use this arrangement, and it is in 2022, it is 355. So 355,000 euros is the maximum that you can close a mortgage for or buy the property for when it comes to using this arrangement. What this means is 355, that can be the purchase price or the value of the property. So if you buy a house for 360, you won't be able to use this arrangement anymore. Now, I mentioned dropping of property value. Rest assured, I don't expect that to happen anytime soon. Maybe the prices will level out, but I don't necessarily expect a decrease. But that's basically what the National Mortgage Guarantee is. So why do we mention this if it's undoubted, if it's doubtful that it will actually happen that you can use this? Because the interest rate will drop significantly. You have more security for the bank, so you pose less of a risk for the bank. because you have this insurance linked to your mortgage. If that's the case, you pose less of a risk. If the bank regards you as less of a risk, they will drop their interest rate. So that could be a benefit for you, because the lower the interest rate is, the higher your maximum mortgage capacity is. So that's a balance we can find right there. And that's usually about November, December, the new amount of this national mortgage guarantee limit will be set for the year after. So right now it's 355. End of the year, we'll hear what the new limit is for the year after. So that can definitely benefit you if you're in that price range.
Cool. Thank you very much for explaining that. Then transfer tax, I guess something that a lot of people will have heard about as well. This pretty much is a tax that is taxed over the transfer of ownership from the seller to a buyer. So once a transfer happens, you have to pay a tax amount for that. There are a few different rates here in the Netherlands for the transfer tax. Well, we'll start with the one on the right, with the example one on the right. I think that is the most common one. It's a couple, both age under 35, could also be over 35, buy a property of 500K. Then both parties pay 2% of their 50% share of the property. So in this case, the total transfer tax will be 2% of the purchase price. To make it a little bit more attractive for starters on the market, the government came with a transfer tax exemption. If we look all the way to the left, and there are a few factors that you need to comply with to be able to actually get the transfer tax exemption. First of all, you need to be under 35 years old. The property needs to be 400K or less, and it needs to be the first time that you're actually making use of this exemption. If one of those three factors are not the case, then immediately you cannot use the exemption. However, if all three of these factors are in place, then instead of paying 2%, you actually be paying 0% transfer tax, and therefore no transfer tax, which is of course very beneficial, as 2% can be quite a lot of money that you need to pay. Then we also have a situation that we see in the middle. This is actually a case where one of the buyers is over 35 and therefore doesn't take the factors, but one of them is under 35, in this case 33. They're buying a property of 400K, could have been 399 as well. But in this case, Kate actually pays 2% over her share and John pays 0% over his share. Therefore, in totality, they're paying 1% transfer tax over the whole 100%. So that is also a possibility. Now we actually have another rate as well, not so applicable in this case, but if you are buying a property with the sole purpose of using it as an investment, so to buy and rent out, then you're actually paying 8% transfer tax, which is well, quite a lot of money. Once the presentation is shared with you guys tomorrow, on the right you see the visit the transfer tax checker. You can press on there and then fill in your specific situation, and the transfer tax checker will actually let you know how much transfer tax you're paying. But this changed actually since 2021 and will at least stay applicable until 2024. Good to know. Cool. Well, it's always good to know where you guys are in the process. Again, potentially to tailor it a little bit towards your needs. I'll start up another poll. It's always nice to know if you're still in the research phase, if you've potentially already viewed properties or even had an offer accepted. And it's always nice to know if you've had a chat with a buying agent and or mortgage broker yet. I'm very excited to see if there are people here who have an offer accepted already. That would be amazing. See, the majority is still in the researching phase. Makes total sense. That's probably why you guys are here. Cool. Getting a lot of responses in. Thank you very much, guys, for that. That always helps. So I see that the majority is in the researching phase. I will end the poll so we can move on and make sure that we actually add some information to that. All right. Well, let's actually compare the two, renting versus buying. Both have their pros and cons. We'll start with why you should rent or what the benefits are of renting. Maybe a little bit strange in a buying webinar, but I think it's also important for you guys to know what the benefits could be of renting, as most likely the majority is renting currently. Well, first of all, you have a lot more flexibility, right? You 9 out of 10 times have 1 month's notice. If you want to move in, it takes around 2 weeks to actually move into the property, and it's a lot easier to leave the property as well. So you have a lot more flexibility there. The majority of the taxes and maintenance are paid by the landlord. The property tax, the sewage tax, water tax is all taken care of by the landlord. If anything breaks, like a window, the roof, your gas stove, oven, etc., these expensive things are also covered by the landlord. So the costs, your monthly costs regarding your property will be a lot lower. Besides that, no down payment is required. Of course, you have to make a deposit when renting, but this is most of the time 1 month's notice. Sorry, 1 month's rent. Whereas if you want to buy a property, you have to pay, typically speaking, around 3 to 4% of the property price in closing fees. We'll touch base a little bit on that as well later on. But this is a lot more money than just 1 month's rent. Then some cons of actually owning your home. Well, it reflects with the things I mentioned just above, taxes, maintenance, and it's a lot harder to move. If you want to move to another property, you first have to sell your own home, assuming that you need the money for the new property. Well, we hope you guys are still interested in buying your home. That is why you're here. Let's talk about the pros of actually buying a home. Well, instead of the flexibility, you have quite some stability, which is nice. No one can kick you out of your home as long as you keep paying your mortgage installments. You can stay into the property as long as you'd like. You're not paying rent. The payments that you're making is to build up equity. Of course, a little bit of interest as well, but the majority of the payments are actually, I always say, being put into the bricks. And at the end, you can sell the property and use that equity, put it right back into your pocket. And currently there's still a mortgage interest deduction, meaning that even though you're paying interest, a lot of it you're getting back at the end of the year when you're doing your income taxes. When we're looking at renting your home, and the cons of that is that we see that the rents are keen to keep on rising. Every year, at least with I think it's now currently 1.7% or so. But besides that, the market is just increasing and increasing, and therefore the rents will keep increasing as well. There are no tax benefits, and there's of course no creation of wealth. The money that you're paying to your landlord is to pay off his mortgage instead of paying off anything that you own yourself. So you can see there's money down the drain. Robin, from a financial perspective, renting versus buying.
Yes. So when you compare two similar properties, Ludo remind me that I'll adjust the interest rate that's stated right there. So right now it's stated to 185. That unfortunately is a bit outdated. Right now the average interest rate is somewhere between the 3 and 3.5%. By the way, just to kind of reply to any questions that might come up later on, that is a more stable interest rate than the 185 that is stated there. Those were over the last couple of years, and right now the interest rates are kind of normalized to a more healthy percentage at least. So that being said, when you compare renting versus buying, two similar properties in the same area, similar square meters and so on, similar finish, and you can see that renting this property would cost you approximately 2,250 euros per month. Whereas the mortgage, in this case, is approximately 1,832. You can see in the right hand corner. This is based on that interest rate. So if you base that on the current interest rates, let's say it's about 1,900 euros. So that's still significantly lower. So then your mortgage payments are lower than the rental payments that you would have to do. So for one, that is an easy equation, of course, right? But there is a closing fees that you have to pay, or the buyer's fees is also known as. That is the investment that you do when buying a home. that covers the transfer tax, if you have to pay them, of course. Transfer tax, the cost for your buyer's agent, your financial specialist, for the notary, your appraiser, and so on. All of that combined, let's say that it's about 23,000 euros. So then you have to make a comparison. So when does it really make sense buying a property instead of renting? Essentially, when you break it down, the period that it takes you to earn back that investment is, let's say, about 50 months, let's say 1.5 years. Even if we would say 2 years. So from 2 years, 1.5, 2 years, it financially makes sense to buy a house instead of renting. While it really starts making sense to when you buy a property, when you're planning to stay in a property for, let's say, 2, but preferably 3, 4, 5 years, if that's kind of your range that you think, well, yes, that's the term that I would like to stay in a property, it starts making sense. Because if you look to the left, the rent that you pay per year is 27,000 euros. Now that is money down the drain. You don't get anything back from the rent that you pay. If you want to break it down even further, when it comes to buying, your monthly payment of this, let's say 1,900 euros, is split into 2 in the end. So part of it you repay on the mortgage. So that's essentially putting money in your bricks. So you get that back when you sell the house. And the other part is interest. And that interest, that is also money down the drain. So when you see in the table as well on the right end, interest payment during the first month is 691 euros approximately. Let's say 700 euros. That's the actual comparison that you make. 700 euros money down the drain versus 2250 money down the drain. That's an easy equation in the end. But that is all when we focus on buying a home. What the most important thing is check what your financial situation is, or have it checked, have a financial analysis done, so to see what actually makes sense. Does it make sense for you to rent a property, or does it make more sense to buy right now? Could also be that it makes more sense to wait a little while before you're buying. I'm not saying that you have to, but make sure that you make the correct decisions based on the due analysis. That's basically what it is. To make sure that you make good decisions on the long term as well. I think if we go to the next slide, then we can see the equity, because I mentioned before you repay on the mortgage. So let's say you have a mortgage of 525. Even if the interest rate is right now about 3%, then the repayment is pretty much the same. So it means that in 5 years, you repay up to about 70,000 euros. So that means that in 5 years, you save up 70,000 euros. Now that is the equity that you build up. This is the situation where the property value stays the same. Now, expectations are that the property value, especially in the Amsterdam area and the larger cities area, will still increase maybe a little bit or maybe flatten out a bit. So that has not even been included here. This is just solely repaying the mortgage. So in 5 years, when you buy a home, you make about 70,000 euros in this price range. So that also shows you what kind of investment buying a property could be.
And that is a nice amount as well to have in your pocket at the end. Cool. Well, let's look at some market drivers. We all know that the market has been rising quite steeply. Is now softening a little bit, but expectancy is, like Robin said, that the prices will still keep rising on. Well, some causes that actually push the prices to increase. First of all, there are quite some fiscal benefits in play currently in the Netherlands. For example, the transfer tax exemption that I was talking about, the interest rebate, the fact that there are no capital gains. So once you sell the property, and in the example that we did before, where you have built up 70,000 euros plus potentially anything that's over market value, you can just put into your pocket or into another property. You are not paying any taxes or capital gains on that. Currently, there's still a tax-free parent donation in place. Until the end of this year, your parents or relatives are actually able to donate 100,000 euros tax-free when it's used to buy a property. I think next year it's going to be around 35,000 euros. And end of 2023, that is going to be gone in total. So if you do have some wealthy family members that would like to do so, I would advise you to do it before at the end of the year. even though the interest rates have been increasing lately, they are still very, very low, hovering around 3.5%. And if you look back into 2016, where that was already a lot higher, we are still at a very low interest rate situation. Of course, like we mentioned before, the rents keep rising. Therefore, a lot of people tend to move towards a purchase home because they don't want to just spend that money and push it down the drain, but they want to put it in their own pocket. And I think the most important factor is the lack of supply. There are still a lot more people looking for a home compared to the amount of homes that are available. And as long as this is the case, the prices will keep rising. The Dutch government came with a very ambitious goal to build, I think, around 100,000 homes per year, something like that. It's very ambitious, most likely not going to happen, but they are working on it at least to balance out the offer and demand a little bit. Like we mentioned before, you need money to actually buy a home as well. Unfortunately, the bank will only give you 100% of the market value. Anything above that, overbidding, but also closing fees, need to come out of own pocket. Well, here we have a list of things that most likely will need to be paid when buying a home. First of all, transfer tax we were talking about. That's 2% of the purchase price, unless you are able to make use of the transfer tax exemption. You'll need to go to the notary. If you're getting a mortgage, you need a mortgage deed between 600 and 1100 euros. Transfer deed is always needed. This is the deed where actually ownership is passed on from the seller to the buyer. Again, between 600 and 1100 euros. You'll work either with a bank or with an independent mortgage broker. Costs are around 15 to 3400 euros. When working with a typical real estate agent, the commission is between 1 to 2%, including VAT, of the purchase price. However, of course, if you work with the agent, the charges are a fixed fee. Again, if you need a mortgage, you'll also need to get the property appraised, someone who is an official appraiser and to actually decide the value of the home. Between 550 and actually 800, I would say. In Amsterdam, it's a little bit more expensive, but yeah, something that is needed for getting a mortgage. Technical inspector, something we always advise, a person that comes into the home to make sure that the property is actually in a good state and also in the state that was promised to us. If you do not speak the Dutch language fully, then you actually need an interpreter at the transfer, when the transfer takes place. This is typically 250 euros. If you have a very unique language, then it might be a little bit more expensive. However, if you speak good English as well, we always advise you to just go with English. It's the cheapest language, unfortunately. You'll also need to make either a deposit or a bank guarantee. Again, we'll touch base on this a little bit later on. A deposit is 10% of the purchase price. If you don't have that in savings, you can also choose to actually have the bank make the deposit on your behalf. Of course, nothing is free. They charge you either 1% of the guaranteed amount or around 250 euros. And then we have the NHG. If you want to make use of this and you're able to make use of this, they charge you a one-time fee of 0.6% of the mortgage amount. This is like an entry fee to be able to use their insurance and discounted interest rates. Now on the right side, we also have the tax deductible column. All the costs that are related to a mortgage are actually tax deductible. So that would be the mortgage deed, the mortgage broker, the appraiser, and the NHG. All of those costs are tax deductible. Unfortunately, EHN's costs are not tax deductible yet. The government still thinks that people can buy a property without consultation on the buying side. But hopefully that will change in the near future as well. Cool. Well, let's give you some tips to actually win in the current overheated market. First of all, we, like I mentioned before, need to look at value. What does that mean? Is that unfortunately the properties are currently not really listed at their market value. Their asking price is 9 out of 10 times a little bit lower than market value. I would say we have three different kinds of prices: asking price, market value, and purchase price. Ideally, we'll have all three at the same rate, but like I said, not the case. So to look at this example, we have this property. It's listed at 395,000 euros. However, after doing our market research, we come to a market value of actually 415,000 euros. Well, like I said, overheated market, properties are not bought at asking price or market value, but a little bit over that. Someone came in and actually offered 435,000 euros and won the bid. Well, if we look at the difference between asking price and market value, it's 10%. The difference between asking price and purchase price, 10%. This is why you hear a lot, you need to overbid at least 10% to make a winning bid. But actually, if we look between the market value and purchase price, it is in brackets only a overbid of 4.8%. And this is the number that I would like to keep referring to, because this is the actual overbid, the overbid over market value. Could also have been the case that the selling agent did list it at 395, but at 375. Still market value 415, still purchase price 435. Now the overbid over asking price was at 10%. All of a sudden is 16%, while the overbid over market value again is 4.8%. So in the middle column, yeah, nothing changed. Overbid was still 4.8%, but all of a sudden the actual overbid over, or the overbid over asking price was 16%. So we get asked a lot, how much percent do I always need to overbid? I find it a very difficult question, because it really depends on how the selling agent listed the property. There aren't any rules currently here regarding asking price, so you can literally list it at 100,000 euros and having market value at 415. While that doesn't happen very often, it is technically possible, and then an overbid of, well, X amount of percent is needed. And that's why I only really want to look at value versus purchase price. Besides that, what is a winning offer? Well, funny thing is, it's offering a good price, not always the highest price. Why do we say that? If we go back to this example, if a property has a market value of 415, and we offer 500K, and we need a mortgage of 500K, yeah, we're never going to get it, because the appraiser is going to come in and say, yeah, Ludo, you offered 500K, but the value is actually 415. So the bank will also only give you 415. So if we make an offer of 435 here, and we can say, but we have some own capital to actually cover the difference, then that's far more likely to get accepted than someone offering 500K, but being dependent on a full mortgage. Besides that, it is important to offer some security to the seller. The most common way of doing this is to either lowering the financial clause or taking out the financial clause. Well, the latter is something we don't do in a blink of an eye, but we'll also always do it with consultation of Robin, for example. But this is saying that even though you are able to make use of a mortgage, you're saying, if a mortgage is denied, I will still move forward with the purchase. And therefore, there is no possibility for a seller that purchase will not go through due to a mortgage being denied. So in that case, you offer some security to the seller. Making an offer with the least amount of hassle is also quite favorable. The biggest hassle, I would say, or the most generic hassle, is doing a technical inspection. This is where you have someone come in again to make sure that the property is in a good state. I have to say, in the Amsterdam region, it's not such an issue. Most of the selling agents are aware indeed of the fact that the properties are, of course, very old, and therefore it is nice to have a technical inspection done to know what you're buying. But we see in a lot of other areas in the Netherlands that actually sellers and selling agents trip over a technical inspection clause. So if you feel like the property is in a good state and it was built, for example, 10 years ago, you can also choose to take that out and make the process a little bit more smooth for the sellers. Now, the last one is something that we see, especially the last year, have more impact. And this is offering a personal touch to the offer, where a lot of people are, of course, glad that they're able to sell their home for a very high price. They don't want to contribute to the whole investors market. So if you offer a nice personal touch saying, well, I want to use your beautiful home to start a family and make it all sweet and gooey, the sellers do actually prefer selling to either a young family or someone that will actually take good care of the home instead of someone that just wants to flip it and make a quick buck. So it does definitely have value there. Last but not least, due diligence. This is an important one as well. We have the technical inspector and the appraiser. Before I move on, I'm going to give you guys a few seconds, 30 seconds in the chat to actually answer this question. Do you think you book them before or after your offer is accepted? Always curious to know what you guys expect the answer is going to be. Just take a few minutes in the chat to do so. I see before coming in. Also and after. The opinions are mixed. Well, Eunice said, I think before, because their findings contribute to the offer decision. Makes total sense. All right, I'm not going to keep you up in any more tension. So actually the answer is right here, just right after the offer is accepted. Well, to explain that a little bit, why that's the case, a technical inspector and an appraiser, they don't work for free. They cost money, and therefore, if you keep doing a technical inspection and an appraiser before the offer is accepted, that would mean that you're paying, let's say, 800 euros every time that you want to make an offer. Well, as you might have heard, in the current market, it is not unusual to get your offer denied 2-3 times even. That would mean that you're paying 800 euros 2 or 3 times before actually getting the offer accepted. That would be a waste of money. So what we do is actually, when the offer is accepted, we have around 1.5 weeks before signing a purchase agreement. Good to know is up until that moment in the Netherlands, the deal is not binding. So up until that time, you can either go left or right with the purchase. In this 1.5 week, we want to have the technical inspector come in and the appraiser, so that before signing the purchase agreement, we know the value and we know that the property is in a good state and a comfortable state, at least, to move forward with. Then after signing the purchase agreement, you still have another 3 days so-called cooling off period, where even though you've signed the purchase agreement, you can pull out of the purchase without giving any reason. After the cooling off period, you can still pull out, but then there are some consequences attached as well, of course. Most predominantly the 10% that you need to pay towards the selling party. Alrighty, to give you guys some time and timelines, I would say the whole process takes around between 3 to 5, 6 months, depending on how active you are. From left to right, we'll start with the search, find a good property, most likely look on Funda, see if the property that we want are actually being listed. This is actually a quite small area, but we'll go to the viewing, we'll do the price research, we'll do a property document review, we'll submit an offer, and then here we hopefully will have a few hours of sitting like this, but hopefully we'll get the offer accepted. And then this is the 1.5 week we were just talking about. We'll have the appraiser come in, we'll have the technical inspector come in. And this is also the time, especially in Amsterdam, where the notary is drafting up the purchase agreement. Outside of Amsterdam, the purchase agreement is drafted up by the selling agent, but that also happens in this time period. We'll go either to the notary in Amsterdam or outside of Amsterdam. We can do it digitally, but we'll sign the purchase agreement. Again, the document that is saying, okay, now you have a legally binding contract between the seller and the buyer, stating that seller is going to sell and buyer is going to buy. Once that is signed, then you head back to Robin and say, mortgage time. You will apply for the mortgage. Well, it says here average 4 weeks. Now with the mortgage rate increasing, I feel like it's taking a little bit longer than 1.5, 2 weeks, but Robin can definitely do it under 4 weeks. Then we'll have the mortgage application approved. Well, this is again a moment where you open a bottle of champagne, because then there's nothing really that can change the course of affairs. We'll let the sellers know as well, so they know that the purchase is going through. Then it's a few, either weeks, sometimes months, waiting for the sellers to actually be able to transfer. We'll receive a statement of completion. It's a fancy word of a final invoice with all the costs on it. So that's actually my costs, Robin costs, transfer tax, notary costs, municipal taxes, everything that is related to the purchase, except the appraiser and the technical inspector. They generally send the invoice to you directly. You'll pay the notary in one go, and then the notary is responsible for actually making sure the money is going where it should go. So the notary pays out to us. Right before the transfer, we'll actually go to the property again. We'll have a final inspection to make sure that the property is still in the same state as agreed upon. So sometimes between actually, making the offer and actually having the receival of the keys, there are a few months. And I've had a case where a seller sold a 3-bedroom apartment, then during that period thought, well, the bedrooms are very small, let's take down a wall and sell it now as a 2-bedroom apartment. Yeah, of course, that is not allowed, especially if you sign a purchase agreement with a 3-bedroom apartment. So that is why it's very important to have a final inspection to make sure that it is still the home that you expect to receive. Well, we'll go to the notary, sign the transfer deed, we'll sign the mortgage deed, and then it's really party time. You get the keys, and well, right from there on, you can move into the home and it is yours. Then you still have around 2 months of liability term. It's a little bit of a gray area. We always advise you don't use the whole 2 months, but actually intensively use the house the first 2 weeks. Open all the windows, open all the heaters, and make sure that the home really works as it should, because in that period you can still go back to the seller and say, hey, you promised all the windows work, but now one of them doesn't open, and then they're actually still liable to fix that. Cool. Well, let's move forward with the frequently asked questions. We'll also answer all the questions that are still left in the Q&A, but we feel like there are always a lot of questions that return every webinar, so we added them in the frequently asked questions. First of all, a question for you, Robin. Is it actually possible to get a mortgage with a temporary contract or possibly as a freelancer?
Yes. That's the quick and easy, but to give it a bit more background to this answer, let's start with the temporary contracts. So when you're employed, you have 2 options. You have an indefinite or a temporary contract. If you have an indefinite contract, all good. Banks like security. They kind of have an idea that for the foreseeable future, you will have income, and that's what they will base it on. So if you have a temporary contract, the bank will also say, okay, sure, then we don't know for 100% sure that in a year's time you will still have a contract. So 2 options there again. So either we'll base your income on the average of the last 3 years in the Netherlands, that is, or what we need in any case when we apply for a mortgage is a so-called employer statement. There's an overview of what your employer sets up, confirming your name, the place that you work, what kind of contracts you have, what kind of income do you have, and well, like I mentioned, also the contract. So also the term, but they can also tick a box, and that's the employment continuation statement, also known as a statement of intention, that they intend to keep you on if you proceed performing the same way that you did, or better, of course, and the company, same thing. What this means is they intend to keep you on. That's sufficient security for the bank. Also, this statement is not legally binding. So even if your employer signs this, and then in a year's time they do let you go, so they don't continue with your employment contract, you cannot go to court and say, but hey, you signed this. That's not legally binding. So for your employer, there's no reason not to sign it, and it is sufficient confirmation for the bank. Now, obviously, we'll check as well. So even if they sign it, it's also something that we'll check with you. Well, do you also feel comfortable that you'll keep working at this employer and that you make approximately the same salary? Because we also want to know for sure that not only that's okay for the bank, but also we don't overcredit you on the long term as well. So that's basically it. So if you have a temporary contract, yes, there are possibilities, mainly when your employer confirms that they're intending to keep you on. Now, as a freelancer, it's a bit different. So a freelancer, entrepreneur, company owner, it's pretty much the same thing. You're not an employee. you're your own employer essentially. And then what you can read online usually is that you need at least 3 years history in the Netherlands to be able to close a mortgage for. That's not necessarily the case. 1 year is already sufficient. But again, the more security that the bank has, the more likely it is that they will secure a mortgage for you. So that kind of depends on the lender as well. Now, there could even be the situation that you currently are self-employed, you have your own company, and maybe you continue the company that you had abroad for a couple of years, and now you proceed to have that in the Netherlands as well. Then still we need at least 12 months history, but then we might use your history from your company abroad as well. But this is a very specific thing where we have to look into what is the specific situation for you for both temporary contract as a freelancer. So yes, there are possibilities, but be sure to be well advised and informed about your options.
That is always important, for sure. Thank you. Well, this is a good one as well. What happens if you want to leave the country after several years, especially for expats that are moving here? Big chance that they will proceed with their adventure somewhere else in a few years. What do you do with your home at that moment? I would say there are three options here. First of all, quite an easy one. You keep your home, nothing really changes. Of course, then you keep your mortgage costs. You will have to keep paying your municipal taxes, etc., etc. And you just keep the home most likely as a investment thing, or you use it as a vacation home and you come here in the summer to enjoy the Amsterdam summer. The second thing is change it immediately to a investment scheme. This is where you rent out your home. However, good to know is that you do need permission from your bank. Once you close a mortgage, it will be a residential mortgage. So if you want to change that into a investment mortgage or a buy-to-let mortgage, so to say, you do need permission from your bank. 9 out of 10 times they're not very keen on doing this because, well, the rates are very different. And you also need to have paid off at least 30% of your mortgage amount. And there are a few other things to keep in mind. But generally speaking, you need permission from your bank. I see you nodding your head, Robin. Do you want to add to that?
Sorry. So when it comes to that 30%, so if you want to refinance your mortgage, basically what it is, it's not necessarily 30% of the mortgage that you have, but as you mentioned before, when you close a residential mortgage, so for a house that you're living in yourself or going to live in yourself, you can finance up to 100% of the property value, right? So that's the thing. When it's an investment mortgage, it's a bigger risk for the bank, so they will supply you a lower mortgage. So that means that you can take, let's say, an easy calculation, about 70% of the property value you can close as an investment mortgage. Could be that after due time, the property value has increased, you repaid on your mortgage, so you're already within that 70% range. So there could be options that you can refinance your residential mortgage into an investment mortgage, so you can rent it out without having to do any down payment additional. It is a different mortgage application altogether, so be well advised. But there could be possibilities. I know that a lot of people, and that's what you'll read online, hear from colleagues, friends, or family, that they say, well, sure, just rent it out, it's fine. And that sounds okay because you pay a little bit less interest rate, but in time, if they catch you, if they find out that you're renting out, you have to sell the house right away. Sellers or tenants have rights to stay in the property. So then you have to sell a house with a person in there, which decreases the value. So be sure again to know what's going on. That's basically why I was nodding my head. But yeah, thanks, Leo.
Again, be well advised. Have 2 advisors better than 1. That's for sure. And then the third bullet point, I guess one of the easy ones as well. You can of course just sell your home without any penalties or capital gain taxes. So if after 5 years you've made a quick buck on it, you've had repayments done, and the market increased, well, fantastic, sell it and use that cash in your next adventure. Well, we talked about this just now. Is it possible to rent out a house or a room? Like we mentioned, it is possible to do so. A house a little bit more difficult than renting out a room, where renting out a room, you don't need to inform your bank. Make sure to have a good agreement with the tenant that if you want to sell your house, that you can actually do so without the tenant being in the home. So we always advise you to draft up some kind of agreement that gives you full power of the property, as if you are taken into a tenant, immediately you will receive also tenant rights. So it's important that you have an agreement in place. Renting out a home, like we mentioned before, yes, of course it's possible, but do it in good consultation with your bank to make sure that you don't have any penalties later down the road. The 10% deposit I need to complete. I'm going to ask this to you, Robin. What is this all about?
Yes, so let's say you put in a bid, you won the bid. Happy days, of course. Then nothing is final, well, like Ludo already mentioned, only when you sign the purchase agreement. Now, one of the topics in the purchase agreement will be the 10% security deposit that you have to pay, essentially. What this means is usually about, correct me if I'm wrong, usually about 4 or 5 weeks after signing.
Yeah, indeed.
So that's because then you have sufficient time to secure your mortgage and then secure the 10% security deposit. What this means is if your mortgage got approved, very good. You have the security that you can move forward, but the seller doesn't really know anything. Even if your mortgage got approved, you could still just pack your bags, drive into the sunset and never to be heard of again. Then the seller has to essentially start everything all over again. So there's this security deposit of 10% of the purchase price, which means, let's say, purchase a property for 500,000 euros. Then you have to transfer 50,000 euros to the notary for safekeeping. The security deposit being what it is, the notary keeps it until you keep your end of the deal, meaning you actually buy this house, sign everything at the notary, receive the keys, and then this 10% is released again. Will either be sent back to you or used to settle the payments that you have to do anyway. This is one option. So this is when you input 10% of the purchase price out of your own savings. Now, it could well be that you don't have that available, or you might not want to use your own savings because you have it invested in something, and then it makes more sense to keep it at that. So then a bank can also, or a financial institution can also secure this 10% security deposit for you, and that would be in the form of the bank guarantee. Now, bank guarantee means as much that the bank will secure this 10% security deposit. It won't be part of the mortgage, it's completely separate. But the bank will then secure that for you. Now, as Ludo already mentioned, they don't only do that out of the kindness of their hearts, they will charge you for that, and that kind of depends on what bank we go with. Some lenders actually do, some banks do offer this service for free. So we'll see what makes the most sense to you, and your financial advisor should also take care of this bank guarantee as we would do as well. So that's basically it. To make sure 10% security deposit is to make sure that you move forward with this purchase.
Great, thank you very much. Oh, well, here we have a timeline for that as well.
Yeah, exactly.
So mortgage application is approved here. 9 out of 10 times a week after that, the bank guarantee is made. If you don't need a mortgage or you have taken out the financial clause, then there's no time period mentioned to have the mortgage application approved. Then it is still generally around 4 to 5 weeks after the purchase agreement is signed. Well, not totally unimportant, what our fees are. We'll start with our fees. At EHN, we have 3 packages. We have the Smart Package, Complete Package, and the New Build Package. Smart Package is a little bit more for the independent workers that are familiar with the process already, enjoy being more included in the process. So you will be booking the viewings yourself, you will be attending the viewings yourself, and all the other third-party meetings you will be doing by yourself. Of course, we will still be here as a consultant from A to Z, but you'll see us a lot via the Google Meets. So we'll still be reviewing the property documents. It will be very important doing the price researches, submitting the offers, reviewing all Dutch legal contacts, etc., etc. With the Complete Package, we of course also schedule with viewings. We attend the viewings. We join you to the third-party meetings, and we'll also offer some extra transfer support. Now we also have a new package. It's the New Build Package. This is for people who specifically want to buy a new build project. Of course, this is a little bit different. You can't go to viewings. You can't do a technical inspection because those things are not, or the property is not there yet, so it's not possible to do so. But we'll join you to the meetings with the developer, with the selling agents. Again, review all the documents like the technical descriptions, transfer deeds, the things that are specific to new build projects. It's a fixed fee. Doesn't matter, again, if you're buying a 200K or 5 million, it will always be the same amount. Robin, your fees.
There we are. Yeah, the Mr. Mortgage fees. We essentially, when you buy a house, whether it's your first property, or when you buy your second property, or when it's a buy-to-let property, we have the same fee of 2,999 euros. In any of these scenarios, we always start with a financial analysis to really dive into the specifics of what you can borrow. I saw the question coming up in the Q&A or in the chat, how you can find out what your mortgage capacity is. 3 options, essentially. You can call a bank, and they will do pretty much the same as an online calculator. If you call 3 different banks, you will get 3 different numbers. Same applies for online calculators, even worse, maybe. So don't base a bid on an online calculator, and preferably also not on a bank. Make sure that you check in with an independent financial advisor, because they, and we do as well, have a range of mortgages and mortgage lenders to check in with. We work with over 35 different lenders, so we always know what the best option is. So we don't give you an estimate. What a bank would do is they will say, okay, sure, here's an estimate, and come back to us when you actually bought the property. And then you go there, and it might be that they don't necessarily offer a mortgage within the certain set of features of the property, of your situation, for instance. So what we do is we'll start with a financial analysis to give you a clear and specific rundown of what your options are. And we guide you through the whole house hunting process. So that means that anytime that you find a property with Ludo or Rick or one of your colleagues, of course, and you might say, okay, well, this is the one that I want, or this is what I'm interested in, feel free to send it to me. I will then revise your calculations based on that specific property, so we can decide all together well, what kind of bid would make sense. You can do that when you want to put in a bid. Definitely do that when you put in a bid, but also if you're just interested in a property. This financial analysis that we do, we charge a small down payment for that of 299 euros, just to get things going and just so you know exactly what you can borrow. The total fees are stated right here, already including this down payment. When you want to refinance your mortgage from a residential mortgage to an investment mortgage, is 2,499. First-time home buyer or buy-to-let is 2,999, and when you buy over $1 million, then a mortgage application will be significantly more work. So we charge a bit more, of 3,799 euros. So that's basically what we do. Our fee is luckily tax deductible, so you get back approximately 40% the year after you bought. So that's what we do. We don't have a limit, time limit when it comes to our service. We don't want to push you in buying a home just because our service runs out. I don't think that makes any sense. So that's what we do. And obviously, and this is quite important as well, we don't charge any additional things. So we don't charge extra for speaking English. I mean, we don't have an expat fee, and also any document that you would have to sign for any bank will be in Dutch. We don't expect you to take a crash course in Dutch. Well, you can, but don't do it in mortgage lingo, because for one, that's just very boring, and it's not necessary, because we'll supply you with translations. Also, without any additional fee, we've already set them up, so we don't want to charge you for anything that's unnecessary. So clean, transparent fee, and that's it. That's what we do.
Great, thank you very much. That is, that's always nice, perfect. All right, well, before we get into the Q&A, I have one last poll for you guys. I'm very curious on your experience of the webinar. So feel free to answer 3 questions. And then we'll move on to the part where we add the most value, I think, and that is by answering all individual questions. We'll give you a few minutes to do so. See some nice numbers coming in. Now, if there are things that are not as you expected, feel free to send us later on as well, as that would always be nice to know, of course. Luckily, not so far. All good numbers, that is always nice. Cool. Well, thank you very much, guys. That is always nice to see. I'll end the poll so we can move on to the Q&A. Thank you. All right, Rick, your time to shine. Do we have some questions?
Hi guys, great webinar, very informative. We have some questions left. Very good question. I think it's for you, Robin. Does the bank consider the 30% ruling when identifying your max mortgage capacity?
Yes, they do, or they can. But it kind of depends on what lender we go with. The majority of the banks do. But what is good to keep in mind is that the 30% ruling has a maximum duration of 5 years. And anything that you can borrow more because you have a higher income, right? Because a higher net income, because over part of your income you don't have to pay transfer tax, have to pay income tax, so you have a higher net income. Over that higher amount that you can borrow, you borrow a bit more. So let's say you might be able to borrow 5,000 euros more, but you have to repay that in the remaining time of your 30% ruling. So if you have 4 years left, you have to repay that in 4 years. When you compare that to the duration of your mortgage of 30 years, then in comparison, your monthly payment would be quite high for that additional 5,000 euros. So if you want to stretch it to the maximum, sure, we can use it. If we don't need to, I don't want to burden you with a higher monthly payment. So that's basically it. Yes, we can. Should we? Let's see.
All right, thank you. Then another mortgage-related question. In the situation of a couple where one person is a Dutch resident and the other one is abroad in a EU country, is it possible to get a mortgage? And will both incomes will be considered?
Yeah. Yes, definitely. Also, again, it kind of depends on what bank we go with, but luckily the majority of banks are getting more and more into 2022 understanding that people from abroad coming into the Netherlands, and then it's pretty much regardless if you're from the EU or outside of the EU. In any case, we can use your income. It's even possible, again, depending on the bank, but we selected the banks that we work with focus on these options. It's even possible that you live in the Netherlands and still have an income from abroad. It doesn't even have to be in euros. Then there's still possibilities to include that income in the mortgage calculation. So in short.
All right, thank you. Then a question for you, Ludo. But actually, we can combine those questions. So first, is the WOZ value a good parameter in order to define the market value?
Mm-hmm. Yeah, maybe I'll answer that one first. So that's a valid question, a question that we get asked a lot. The good answer is no, it's not. Why is that a good answer? Because the WZ value is always quite low, and if we have to make a far higher offer to get the offers accepted, and the bank will not look at the WZ value, or the appraiser will not look at the WZ value, coming up with a market value. So the WZ value is actually just a value that the government gives to your property to charge you taxes on. This is based on bulk data. So they look at a whole neighborhood, the average price per square meter, and then just multiply it with the amount of square meters that you have in your property. So they don't look at the state of the home, if you have outside space, if there's ground lease, well, all those factors that have impact on the actual value. And they actually use old data. So the current WZ value of today, for example, is actually from data that has been gathered from 2020. And as you guys know, the market has been rising quite rapidly. So that's not a good representation of today's value. So that's why we say that the lower the WZ value, the better, because that means lower taxes.
All right, thank you. And then another question from Ingrid. Are there any other sources which are reliable in order to define or check the value?
Yeah, there are a few sources. I do have to say that as a non-buying agent, it can be quite difficult and exhaustive process to gather the right information and come up with a value. What we always use is the comparable method. and that is just comparing properties that are, well, comparable in a few factors with the property that we want to buy. We'll look at the purchase price, then index it with the inflation and market increase factor, and we'll come up with a price per square meter. Now, if we multiply that price per square meter with the amount of square meters with the property that we want to buy, we come up with a market value. This is not some business secret or something that we shouldn't tell you. This is just how we do it. That's how an appraiser is going to do it as well. However, gathering good information about good comparable properties and their purchase prices can be quite a hassle. All the information is publicly available via the land registry and the cadastre. But it is important to know if a property is actually comparable or not. And I'm of course a little bit biased, but I would say get some professional help there as well, because it can have a lot of impact. Right? If you think the market value is 350, you make an offer of 360, but eventually market value comes back at 320. If you don't have the difference between 320 and 360 available from own funds, it could mean that you have to pull out, or even worse, have to pay a penalty towards the seller. So it can definitely be of added value to have a consultation before that.
All right, thank you. Then another question for you, Robin. Can I sell the property with a mortgage? If I want to pay off my mortgage, do we have to pay for prepayment penalty?
Yeah, so if you repay your mortgage, let's set aside that you're selling. If you want to repay the total mortgage or part of a mortgage, kind of depends on what lender again we go with. Some lenders allow you to repay anything you like, but the majority of the lenders will have a cap of, let's say, 10 or 20% of the original mortgage sum per year. If you exceed that, you might have to pay a penalty. That only applies when the bank actually loses money over you. So if you close a mortgage for 2% and the interest rate on when you want to make an additional repayment is 1.5, they lose money over you. If the interest rate at the bank at that time is 2.5, they are happy for you to sell, to repay, because then they don't lose money over you. When you sell the house, none of this applies. When you sell the house, automatically your mortgage will be repaid without any penalty, regardless of what bank you are with. So what happens is, let's say you bought a house for 300,000 euros, the remaining mortgage is 250, and you sell the house for 330,000 euros, so it has been increased by 10%. There's a difference of 80,000 euros. The mortgage will be repaid without any penalty. The profit that you made of 80,000 euros will be yours. No taxes due or anything. There's no capital gains tax, so it's quite quick and easy.
All right, thank you. Another question for you: can you get a mortgage with a 0-hour working contract?
Not a lot of banks are a fan of that. So it depends on what the specific setup is in the end, but generally no. But let's look into the situation and what we can do, because the reason why is banks want to have some basis to predict the future for. So they want to know what your income would be, and then when there's a 0-hour contract, so then they don't know what your average time is, what your average income would be in the future. So that's kind of where they're hesitant, but by all means have it checked out, because there might be possibilities, but banks are not necessarily a fan.
All right, thank you. Ludo, is a big down payment an advantage in the bidding process?
Well, yes and no, I would say. Why am I saying it like that? Is because if you're using it purely as a deposit, then there's not really an added value. In the Netherlands, a deposit is always 10%, and making a deposit of 15 or 20% doesn't really increase the chances of getting an offer accepted. However, where does it become more attractive is if you I guess it's in line with making the deposit, is if you are saying, I don't need a full mortgage because I have X amount in savings, and therefore you can present yourself as a buyer that, again, is not relying on a full mortgage. So to put it in an example, if you're making an offer of 500 and you are willing to spend, for example, 200,000 euros yourself, you can actually, instead of putting a financial clause of 100%, you can say, I only need a mortgage of 300,000 and the rest of the amount will be coming out of own savings. The chance of getting a mortgage accepted is also a little, or well, getting a more attractive mortgage is greater if you are able to show that you're putting up a big amount yourself as well. So there are definitely benefits, but I wouldn't say just making the deposit in a lump sum has added value, like, for example, in the States that it does. But it comes more down to saying to a seller that you have the money and are going to use it towards the property and therefore are not relying fully on a mortgage. That's the biggest part.
All right. Then is there a minimum income requirement to get a mortgage?
No. The thing is that when it comes to a minimum income, I mean, at some point it just starts getting more unlikely that you would actually buy a property for a certain amount. So it also depends on what kind of savings you have. So for instance, in the larger cities area, and then you're looking for a property for 250,000 euros, that could be a bit of a challenge. Well, so if that's the case, sure. But then if you have savings available that you can bump it up to, let's say, 350,000 euros, then there are again possibilities. So it kind of depends. There's not necessarily a minimum income to close a mortgage. It just means that if you have a lower income, that might mean that you have to close a lower mortgage and therefore not be able to find a property. That's basically what it is.
All right. So far, that are all the questions. If you have any questions, please let us know.
Yeah, and otherwise, if you have specific questions regarding your situation, feel free, I think it's on the next slide, to book a call with us or with Mr. Mortgage. Tomorrow you'll receive all the slides and the recording as well. Then you can press on a few buttons within the webinar and also easily go to either one of our websites. I think that is it. Yeah, we'll end the webinar based on this. I want to thank you all very much for joining the webinar, and we hope to speak to you soon. Thanks, Rick, for doing the Q&A. Thanks, Robin, for being my right hand when it comes to all the mortgage questions. And then we will hope to see you soon.
Thanks again for arranging everything.
No problem at all. All right. Have a wonderful day, guys. Enjoy the sun a little bit.
All right. Bye-bye.